In March 2018, I bought my first two investment property in a city most people in California never heard of, Independence, Missouri. I paid $134,000 for a fourplex and a $60,000 for a duplex. I'm going to tell you how those two properties and the decision I made after them eventually led me to owning a $1.28 million property in Long Beach, California, without ever having a lot of money to start, without ever quitting my 9 to 5, and without ever taking a big risk that could eventually have wiped me out. If you have a W-2 job right now, and you are wondering if real estate investing is actually possible for you, this is the video I wish someone shared with me before I started. I'm not going to talk theory today. No motivation, no abstract strategy. I'm going to walk you through exactly what I did. The city, the price, the down payment, the profit, step by step, from $50,000 in saving to a $1.3 million asset. And I did all of this while working a full-time corporate job. The W-2 was not the obstacle, it was the foundation. In 2014, I started working as a W-2 employee at an aerospace company here in Southern California. My wife and I worked. We saved every dollar we could. We also had something else. In Vietnamese culture, when you get married, the guests give you the money to the couple as a wedding gift. Not a blender, not a setup like towel. Cash. We saved that too. By 2016, after a few years of working and saving, we had enough to make a move, not a big move, but a smart move. We did not buy in California. We could not afford California. And honestly, the number did not work in California. So we looked where the number did work. Missouri. We bought two properties in March 2018. Same time, same strategy. Property number one, it was on Black Hawk Trail Street in Independence, Missouri. The purchase price was $60,000. We held it. The property manager handled all the management. Then we sold it in August of 2020 for $133,000. The net proceed after everything was approximately $83,000 US. Property 2 on West Linden in Independence, Missouri as well. The purchase price was $134,000. The down payment is $33,000, and we sold it on August 2020 for $185,000. And the net proceed for that one was approximately $73,000. Two property bought the same month and sold the same month, about 20 months later. And the combined net proceed was about $156,000. We were working full time. We were learning as we went, and we walked away with real profit, real cash, real proof that this formula works. But here is where most people stop. They take the profit, they put it in the bank account, and they wait for the next opportunity. We did not stop. We roll it into two separate 1031 exchanges on the same month. This is the part of the story that most people skip over, and it is the most important part. After those two sell, we use a strategy called 1031 exchange. And here's what that means in simple terms. When you sell an investment property, normally you pay capital gain tax on profit. That can be 25%, sometimes 20%, and sometimes more. But with a 1031 exchange, if you roll that profit into another investment property within a specific time window, you defer that tax. You do not pay it now. You keep all of your capital working. That is exactly what we did, twice at the same time. Exchange number one, we took the $83,000 net from the Black Hawk property. It was a duplex, and rolled it into a Highland Avenue property in Blue Spring, a fourplex property that we closed on August of 2020. and we bought it for $330,000. We held it, collected the rent, built equity, then sold it on August of 2022. Extra number 2, we took the $73,000 net from the West Linden property and rolled it into the Northwest 6th Street property, another investment property that we closed on August of 2020 for $280,000. We held it, collected rent, built equity, then sold it on August 2022. Notice the timing. Both properties sold within 10 days of each other in August of 2022. That was not an accident. That was a planned exit because we had already identified the next move and we need both set of proceeds to make it work. By mid-2022, we had been building equity in both the Highland Avenue and Northwest 6th Street property for 2 to 3 years. The market conditions were right, and more importantly, we had already found what we wanted to exchange into next. When we do a 1031 exchange, you have 45 days from the sale date to identify your replacement property and 180 days to close on it. Miss this window and you lose the tax deferral, all of it. So selling both property in August 2022 was not reactive. It was calculated. We knew where we were going before we closed the sale. We had to. From both exits combined, Highland Avenue and Northwest 6th Street, our total net proceed was approximately $350,000. I want you to sit with that number for a second. We started in March 2018 with a $50,000 down payment for the 2 investment property. W2 income we had saved up. 4.5 years later, we had $350,000 in net capital, not from salary, not from bonus, from a system. We did one final 1031 exchange. We took that $350,000 and on September 9, 2022, we closed on East 6th Street, Long Beach, California, a triplex close to downtown Long Beach, the convention center, and the aquarium. A strong rental demand area with long-term appreciation built in. Purchase price $1.28 million. We started with a $50,000 down payment in Missouri. We ended up with a $1.28 million asset in California. Same formula, bigger result. Let me be very clear about something. This did not happen because I am special. This did not happen because I got lucky. This did not happen because I had access to something you do not have. It happened because of a formula, and the formula is simple. Step 1, start small. Outside of California, if you have to, find a market where the number work. Step 2, buy right. The money is made on the buy, not on the sale. If you overpay, no amount of renovation fix that. Step 3, renovate smart. Know your after repair value before you spend $1 on construction. Step 4, roll the profit. Do not let it sit. Use the 1031 exchange to keep all of your capital working without giving a chunk of it to taxes. And step 5, repeat, buy bigger, wait, and roll again. And that is it. That is the entire formula. The only thing you need are time and the right strategy. You do not need a lot of money to start. I know what you are thinking. The interest rates are higher now. The prices are higher now. It's harder now. You are right. It is harder, but the formula still works. You just adjust your saving target. You just find the right market. You just give it more time. I started this journey in 2018 with $50,000 and 2 properties in Missouri that nobody in LA would have looked at twice. If I start today, I could do exact the same thing, just with updated number. I'm Dennis. Be quiet, win loud. I see you in the next one.